Today is 5/26/2016. The time is 9:31 a.m. Eastern. Market open. Prices trading mark to the market 2090.75, 2090.50. Trading ES near contract month June 2016. Reviewing a 1-minute chart. Opening volume here. News came out earlier at this point. Minor volume to the downside. Our bias for today is to the upside because the market has traded up since a base formation was established a few days ago. The preferred entry price at this point will be 2091.75. That's 2091.75 up the session high here. Targets to the upside are 92.25, 92.50 on a daily, 92.75 on a 15, and then right up to 20.93.75 for the next daily. Where the market has just opened, the volume associated with that stamp is just about evenly stacked. This is a custom Vector Traders Consortium 5-second proprietary confirmed volume histogram representing actual buys and sells. Now you have a sell coming in for just over 1600 to defend resistance at the 29.50 level. We'll need volume to the upside to come in order to take that out and for price to continue to the upside. Level 2 at this point, another custom indicator here, has a standout for 1441 above the market at 2093. The 1-minute VMA, however, is down and prices are down off once again. 2091.50, 2091.75 for the preferred entry. No trades have been taken as of yet. Waiting for the volatility to erase itself, more volume to come in on the upside than the down in order to consider being long. More short coming in right now for 592, a few block trades. So resistance still stands, people, at 91.50, 91.75 for what was once the preferred entry. That'll be raised up by a minimum of a tick right now in order to facilitate the area for the best possible fill under the pretense that the trade will never look back if the market will go long shortly here on. Right now, the volume has clearly established itself and is on the dominant downside. Time is now 9:34 a.m. Eastern, 5/26/2016. A lot of traders might have traded long right here, and that would be a mistake due to not having enough information in front of them and assuming just because a probe has been made to the upside through the session high that prices will continue to move to the upside. Trading market open is difficult. What we do know at this point, based on 5-minute indicators here, just a few of them, is that we have substantial injection of short-term money out of the FMI and longer-term money from chicken money flow as well. So the indication is there. What it will take for the follow-through and continue momentum to the upside is more institutional volume coming in. Once again, large players. Right now, the bias is to the upside after a positive divergence in this case and a turnaround taking out many levels that have been established here. Risk mitigation is the key to longevity in trading. No professional had any business trading long this morning under the pretense that prices would follow through above 91.50 for the best fill at 91.75, which is now raised up. In some cases, traders would consider the possibilities of getting through the next daily and the 15-minute level here. However, that could be a later fill and chasing the trade to the upside. So the best possible fill remains at this point right here, while the session high again, and looking for that opportunity. If not, we'll need for price to turn back around, get through the previous point of control located here at 2089.75 through the session low, through a previous daily high or low here, and then yes, the 1 minute level here, which is the final support level that prices will need to trade through for the best, earliest possible fill to the downside. Other than that, you'll be looking for prices to trade through the daily at 87.25 for then the best possible fill at 87 flat. That's 87 flat. So for the moment, we're going to cut the tape now at 9:37 a.m., 5/26/2016, because we are in the middle of an established channel which has become wider based on market opening, and look to see whether the prices will follow through to the up or the downside. And then based on the indicators changing direction on the 5s, money flows in the 15s, which are turning around right now, the 15-minute charts, we will consider trading short. Maybe we won't even have to cut the tape. The point is that we can either be long or short based on this methodology when, and only when, the correct amount of volume comes in and the indicators confirm that that volume is in fact large institutional buying or selling in order to fade these moves for the best possible fills and trade only the true high probability trade setups. So there you have your earliest preferred entry right here at 88 tested. 88 tested. That's below the POC. Stack levels increasingly decrease on the volume that is below the POC, and there we are. Volume downside dominates, and this is the best area to get the best possible fill right here under the pretenses that prices will continue to trade to the downside. Now at this point, we have the 15-minute indicators that have turned around to the downside, and the 5s have turned around as well. The 1-minute VMA is down, which is below your level 2 demonstration right here. Stand out as 1,102 contracts at 2087 and 50 on a limit order. And now prices are trading back up as just above that level has been officially defended and will not be traded through up and until more volume comes in to get through this point. Okay, back in the middle of the channel, we're going to cut the tape. 9:40 a.m., 5/26/2016. After no follow through here, a probe no close at the preferred entry on the down. Again, 9:40 a.m. The time is now 9:47 a.m. and there is a higher possibility that a lot of this volatility that surrounds this area after market opening may have the opportunity to erase itself and for prices to settle down and trade short here. The probe is valid. The preferred entry has been tested below the 1-minute final support level here at 88.25 for the best fill at 88. That's the earliest possible fill we talked about earlier. Traders may want to wait until the daily level at 87.25, that's 2087.25, has been exceeded for the final clear out in order to be short at 87 flat. That's a personal choice. Getting in here is a higher risk category, but you will get the best possible fill if prices never look back. Level 2 shows 8,200 on the down, over 6,400 on the up. Therefore, Contracts are stacked to the downside. 1,065 at 86 and 75, and then 1,100 for the standout, 1,200 just below that. Indicators are on multiple negative divergences on the 15-minute charts and the 5-minute charts as well, getting right down to here at this level. Now, in the event that a trader was short here, one could limit the risk to just a few ticks here. As you can see, the session opened at 20.8875. If held to the upside as resistance and now traded down, would be the best possible scenario that could happen in the moment. The accumulated volume to the downside is fair, but no major orders have come in to exceed the levels that were established back here. Now this goes back to about 933 at the opening, 1600 around this area, and market opening itself was pretty well split, 2400 over 25 on the down. Additional down comes in here as we talked about earlier, and now minor volume here. Once again, if the area at 88.75 for the session open is held as resistance, prices traded down, you did get the best possible fill. Now this is under the pretense that prices will continue to move to the downside, follow through. 87.25 for the daily, 87 for the second leg, and then all the way down to any one of a number of targets, 86, 85, 50, 84.25, 83.25. $9:50 a.m. 5/26/2016, trading ES. Near contract month, daily level has been hit, 87.25. We traded the E-mini market exclusively because of the liquidity. Second leg preferred entry tested at 87 flat. At this point, we'd be looking for a lot more volume to come in on the downside to drive the prices through and to keep moving. 81 over 6,600 on level 2, stacked to the downside. Increased downward momentum on the 15-minute charts. Here we go. 2,000 confirmed, just traded short. That should drive the prices through. 9:54 a.m., 5/26/2016. MTM, mark to the market prices are 20.86 and 50, 20.86 and 50, 20.86.75, now 20.86.25. So we're one tick away from the 1 minute level at 86. Additional volume came in. About 900 contracts were traded short to drive those prices down again. Confirmed. $15-minute chart, EMAs, SMI, and MACD, as you can see, remain clear. So one tick away at this point from the 1 minute level at 86 could have been taken off the table after the preferred entry was established. Here, if prices can hold the daily level as resistance, find this daily level as resistance and hold it at 87.25, there is definitely a possibility that prices can continue then to trade to the downside for another target established here at 86 for sure, 85.50, 84.25, or 83 and 25. That is only if this level is held as resistance at 87.25. Minor uptick on the 1 minute. VTC volume moving average. That is a short-term correction to the upside at this point, still within an existing downtrend. Long-term holders would remain clear to stay short. I think one of the best things about this particular trade is since the preferred entry was established, there was never any need to seriously consider getting out of this trade where the possibilities still exist with the indicator setups that we follow here across the board that prices may continue to trade to the downside. So getting closer to the 1 minute level again here, we're going to be looking for more volume to come in on the down to continue to drive the prices. If volume comes in on the upside, one would want to take this trade off the table and look for another opportunity to get in below 86. Okay, 1 minute EMA is up fairly substantially at this time. So at this point, I'm going to take this 10 contracts off of the table and look for another opportunity to go short in just a second, but let me demonstrate this here. Here we are, 625 for the single trade here this morning. Here's the executions. Okay, long-term holders more than clear to remain short. As you can see, now the prices continue to move down strongly. Target all the way as far as 82.50, an incredible opportunity here this morning in trading E-mini futures. Standout is at 20, 83, and 75 for 1,282 contracts based on level 2. $15-minute level held at this case, this juncture, 20, 85, and 50. And we'll look for the daily high or low at 84.25. Or based on an interruption in a previous open or close, 84.25 to be out of the target there. So nonetheless, right now at 85.50, one could be out and lock in the profit all the way from the preferred entry down to here. We established a high probability trading opportunity here, took a profit above the 1-minute level, and as soon as that profit was taken, you saw more volume come in to drive the prices down to 85.50, where even more profits could have been taken. So for this morning, once again, for the Vector Traders Consortium, this is Jeff Killian and Mark Sisella, offering over, we believe, the highest level of trading education available anywhere today, provided over in a fully transparent environment. We are also proud to announce that we also use, in conjunction with our methodology, Jigsaw Trading software, to allow us to be able to make actionable intelligence determinations, actionable intelligence decisions based off of that program as well, combined with ours to increase profitability. We are in a position at this time, now at 10:01 a.m. Eastern, 5/26/2016, to be able to close out this session for today's trading. If anyone else is trading today, targets to the downside, again, 84.25, 83.25, and 82.50 on the session low would be the areas to consider getting out at. So for this morning, and now at 10:02 a.m., 5/26/2016, we'll wrap up this tape, and any inquiries for serious students of the markets to us can be directed to their website. We'll pick it up on the next session. Thank you for joining us.